Picking the right stock is like searching for a needle in a haystack. It's a puzzle that tests even the most seasoned investors. I have been there, and I'm pretty sure you have been there too. Haven't you?
People buy stocks because they've fallen from price X to 2/3 of X or half of X. On that basis alone, they're buying a stock. That's called bottom fishing the stock market. Very, very difficult. I've had a rough go with it.
These words from Peter Lynch resonate deeply with our collective experiences. He acknowledges the hardships we face when selecting stocks. So my friends, let us embark on a journey guided by Peter Lynch's invaluable insights. Let us uncover the secrets and strategies that can help us navigate this challenging path. Before we dive deeper into this topic, I want to take a brief moment to remind you of something important. If you're finding value in this video and it resonates with you, I kindly ask you to show your support by giving it a thumbs up and sharing it with your friends who are also on their investing journey. You know what's interesting? Despite the incredible engagement and growth we've seen, a majority of viewers like yourself haven't hit that subscribe button yet. So if you haven't already, I encourage you to subscribe to our channel. By subscribing, you'll not only stay updated with our latest content, but you'll also join a community of like-minded individuals on their path to financial success. Lynch believed that one of the most powerful research tools we possess are our own eyes, ears, and common sense. He often took pride in discovering great stock ideas while engaging in everyday activities like walking through the grocery store or simply having a conversation with friends and family. You see, Lynch understood that as consumers, we have a unique vantage point. Our purchasing decisions and personal experiences can provide valuable insights into potential investment opportunities. Imagine this: as you watch TV, read the newspaper, or listen to the radio, you have the opportunity to spot emerging trends or discover companies that capture your attention. Even while driving down the street or embarking on a vacation, you can be on the lookout for promising investment ideas. After all, consumers drive 2/3 of the gross domestic product of the United States. So, if something grabs your attention as a consumer, it's worth considering its potential as an investment. But it doesn't end there. Lynch's philosophy goes beyond mere observation. He encouraged investors to truly understand the businesses they invest in. It's not enough to be attracted by a product or service. We must dive deeper and comprehend the underlying dynamics. By understanding how a company operates, its competitive advantages, and its growth potential, we can make more informed investment decisions. This level of understanding is crucial in identifying stocks with real potential for long-term success. Lynch also believed that our initial observations and everyday experiences serve as valuable starting points. However, he emphasized that true success in stock selection goes beyond surface-level understanding. It requires delving deeper into the businesses we invest in. Let's say that when you go about your daily life, whether watching TV, reading the newspaper, or whatever you're doing, you have opportunities to spot emerging trends and discover companies that capture your attention. But Lynch taught us that it doesn't end there. He urged investors to truly comprehend the underlying dynamics of these companies. By understanding how a company operates, its competitive advantages, and its growth potential, we can make more informed investment decisions. This deeper level of understanding is essential in identifying stocks with real potential for long-term success. Lynch's philosophy goes beyond mere attraction to a product or service. It's about going beneath the surface, conducting thorough research, and considering fundamental values such as the percentage of sales, the P/G ratio, and cash positions. By doing our homework, we increase our chances of finding stocks that can truly make an impact on a company's bottom line and offer favorable prospects for long-term growth. Lynch firmly believed in the power of long-term investing. He recognized that, barring significant surprises, stocks tend to be relatively predictable over a span of 10 to 20 years. Lynch's philosophy rejected the idea of attempting to predict short-term market fluctuations or time the overall economy. In fact, he conducted a study that debunked the effectiveness of market timing. The results demonstrated that even the least successful market timing strategies over a 30-year period had minimal impact on returns. In other words, trying to time the market is simply not worthwhile. Instead, Lynch advocated for a focus on the strength and potential of individual companies. He stressed the importance of staying informed about the companies in one's portfolio and not being influenced by short-term market noise. His approach was rooted in patience and conviction. As long as the story of a company remained intact and its fundamentals remained strong, he saw no reason to sell. He coined the term 10-bagger to describe stocks that increased in value tenfold, highlighting the potential for significant long-term returns. Lynch's message to investors was clear: invest for the long run and resist the temptation to make short-term predictions. By maintaining a steadfast commitment to understanding the companies we invest in and staying true to our investment thesis, we increase our chances of achieving substantial returns over time. To clearly understand this last point, let's delve deeper into the concept of 10-baggers. Lynch advised against selling a stock prematurely. He recognized the pitfalls of succumbing to impatience and the temptation to time the market. Instead, he emphasized the importance of staying committed to our investment choices and allowing them to fully unfold. Patience is a virtue in the world of investing. Lynch believed in the power of long-term thinking and the ability of quality companies to deliver significant returns over the years. By resisting the urge to make hasty decisions based on short-term market fluctuations, we position ourselves for the potential rewards that come with patience. The journey to achieving significant investment returns requires discipline and a steadfast belief in the companies we choose to invest in. Lynch's approach encourages us to focus on understanding the underlying strength and potential of these companies, rather than obsessing over short-term market movements. In conclusion, Peter Lynch's investment philosophy emphasizes the importance of buying what we know and understand, doing thorough research, and investing for the long run. By leveraging our own observations and experiences, we can uncover potential investment opportunities. Understanding a company's operations and growth potential allows us to make informed decisions and identify stocks with real potential for long-term success. Now it's time for you to take action. Apply Lynch's principles to your own investment strategy. Buy stocks and companies that you truly understand and believe in. Conduct your due diligence and research to gain a deeper understanding of the companies you invest in. And most importantly, adopt a long-term mindset, resist the urge to time the market, and let your investments grow over time. Join our community of investors by hitting that subscribe button. By subscribing, you'll stay updated with our future videos, packed with valuable insights and strategies. Don't forget to give this video a thumbs up if you found it helpful and share it with your friends who are also on their investing journey. Together, let's navigate the challenging path of stock market investing and empower each other to make informed decisions. Thank you for being an incredible part of our community.